What's going on, y'all? I'm gonna have a quick video just to give you all an update. I will not be showing the Robinhood account as far as how much money I have, how much money I've lost, how much money I've made. It's just too personal. But I did show you all that small account challenge because I added some more fun so I can actually do some more serious trading. So today we have this trading performance review. A lot of you all are trading. You all are trading stocks, options, futures, forex, whatever. And I feel like you can critique your categories to your specific trading equity or trading market. However, this is specific for options traders. So you have the trading's performance review via Excel. Here is a list, a nine category list of what you need to have in your Excel spreadsheet because you have to have a trading journal. After the trading journal, you need a trading review. So you need to double up and do as much analysis on yourself as you're doing the stocks itself. Because if you can't analyze yourself, you won't be able to be profitable. So you're going to have start first your date with the trade that was initiated. It's good to kind of know what days you're trading: Mondays, Tuesdays, Wednesdays. Everything could be a possibility of a trend. If Mondays you're bad at trading because you had a long weekend, didn't do enough analysis, you can look at Mondays. When you have Excel, you have infinite amount of capabilities to trend follow your specific trading. So next you have your total cost of trades. You can see that your big trades are costing you a lot. You can say that your small trades are very profitable. So then you would trend follow smaller trades. Currently, I've been only trading my size about $20. I just initiated a trade that was $63, but again, my stop loss is set to where it'll be $20. If I lose $20, I'm out. You have to know your risk management because that's the name of the game. It is honestly, if you see your portfolio and you're at a 0% or higher, you are doing much better than the other traders. Because in this market of trading, 90% of traders are failing. Right now, I'm actually down $9. I was up $38 at my peak, down $9, and I'll tell you why I am now down. It's good for the third one to have your stock ticker. Your stock ticker is to give you more familiarity, shows you which stocks that you are trading well with, and which stocks you need to just eliminate from your watch list. The option strategy is probably by far the most important criteria. You have your naked calls, naked puts, debit spreads, and credit spreads. Sure, there are the butterflies, the diagonal spreads, all that different stuff, but the biggest and most popular spreads and just option trading strategies are your naked calls, naked puts, call credit spreads, puts credit spreads, and call debit spreads and put debit spreads. The strike price is pretty good. You can then look to see, are you doing a lot of out of the money options, in the money options, at the money options, and seeing which ones are more successful because you want to win. You don't want to lose in this market. Six was the expiration date, just to give you some length to see how long are your options out. Are your short-term options very profitable, or your long-term options negative? Just to give you again more criteria. The more, the better. To be honest. Seventh, the option time length that really goes hand in hand with the sixth one. The profit and loss outcome per trade, and lastly, there has to be a reason with every trade. We're not here to overtrade. We're not here to trade every day. We are here to make money, and we need to know why you place the trade. After showing you all this presentation, I'm going to go to my personal situation. I have a total of 10 trades that I placed, and here is the profit and loss of each strategy. Look at my credit spreads. All four are profitable. Look at my naked put. Negative by a lot. I lost $21 on that trade. You have your debit spreads. I don't even like debit spreads after doing those two. I'm good off of two losses. I'm good. I mean, I made $1 off of the Micron, but I would have made at least $15 to $20 if I did a naked call instead of that debit spread. So I am thankful for the knowledge, but now I am good on debit spreads. So look to see, here are my profit and losses of my completed trades. If you see current, that means that it's still pending. I have all these profits on the credit spreads, but this previous week, I decided, hey, let me just do some naked or more directional trading. I understand that I can make money off of credit spreads, but I have a very bad tendency of, when I make money, I decide to say stop with that strategy and continue to find or experiment with different strategies just to see the outcomes. In this life, or in this trading life, you need to have the same trading style or the same trading strategy to have those consistent profits. 4 for 4 for the credit spreads. As soon as I go with the naked put, lost $21, took off 2 of my winning credit spreads. Did another debit spread or another directional play, a debit spread, lost on that, took more from my wins on my credit spreads, and lastly won $1 off my Micron. You see, even on the loss, the 2 losses, there's a pretty short time frame. They could have been longer out, at least 30 days out. You see, I have maybe 4 to 5 sentences on why I place those trades. Pretty good to have that long description and also some technical analysis on the charts in my OneNote for if I needed all those pictures to see. But I just needed the text right here just to give a reason why. But this is a trading review. It is, again, more important to analyze yourself than analyze the market. We are here to make money. We're not here to lose money and give back the profits to the market. Thank y'all for tuning in. Hope y'all enjoyed this and learned something. I will see you all soon.